Okay, welcome back. We are on page 9 and we are working on example 4. We are doing investments, the same ones as in example 2, except this time we're doing fair value through OCI, and so we purchase an investment, get some dividend revenue. Notice it's recorded separately, it's not just investment income loss, and we've bought 3 different investments. So we are right now on May 20th selling a portion of Lee shares. And when you're using FVOCI, first you write the portion of the investment you are selling to fair value based on the proceeds you'll receive. And really we're looking at a percentage. Less any transaction costs, use unrealized gains or losses through OCI. Okay, so let's do the proceeds. So these numbers correspond up there. So proceeds are, we're going to get $31.50 times $37 each. But are we going to get all of that, or is there going to be a brokerage commission taken off? So we have to take away the 2993 equals 113,557. Now we need the current balance in the investment account. Okay, so in our investment account, way up here, we have 334,530. So, and just the portion of shares to be sold. So let's do that first. We're going to sell 3150 out of 9450 shares. And the balance right now is 334 from the top of the page. So that's going to be 111,510. So we are going to write this balance to fair value. This is our fair value. So we have to increase the investment by 113,557 minus 510. So 2047. So our entry is debit investment fair value OCI for 2047 and credit unrealized gain. Don't forget that part, for 2047. Sorry, I meant to color code that. So that's step 1 from up there. Okay, so we've now marked our investment in Lee, what we're going to sell of it, up to here. Okay, so the balance is exactly what we're going to get. So now the balance of Lee's 3150 shares is exactly what we're going to receive for it. So we can and continue with this little process. So on page 10, we're going to do step 2, and this time I'll coordinate it. So step 2 was record the sale of the portion of the investment. It should be no gain or loss. So we're going to sell investment. And we're getting how much cash? Well, we've already calculated in the proceeds, so 113,557, so that was the proceeds. And how much do I write the investment in fair value OCI off at? 113,557. Already adjusted to fair value from step 1. So the third step, we need to close retained earnings to AOCI. And that will be the value of gains, unrealized gains and losses, OCI. So, how much is sitting in unrealized gains and losses OCI? Well, we just have 2047. So, we have a balance of 2047 gain, which is a credit, in unrealized gains and losses, yeah. So if it's a credit here, it'll get closed to retained earnings as a credit, and then that'll close to AOCI as a credit. So we assume closed to earnings already. So we're going to, and that'll be a credit because it'll match. It'll increase retained earnings because it was a gain. So we're going to debit retained earnings to close. And AOCI for 2047. So that's pretty straightforward on its own. The kind of missing part was closing to retained earnings. Not sure. Anyway, I'll let you know if we're going to change that. Okay, but right now this matches Wiley Plus, just so you know. Okay, so that's it there. So just read the steps. First, we calculate the proceeds and the current balance and write the portion of the investment that's being sold, not the whole thing, just the portion, to fair value, whether it's up or down. In this case, it was a gain of 2047. Then we sell the investment. There won't be any gain. So, or loss if you've done it right. And then close retained earnings to AOCI. So the next time we do something with this is December 31st. And we need to mark all the investments to fair value. Still the same. I'm going to do it in all the same method, right? Some might be a different method. You'd have to separate those. But all the same method. Do in one entry. So, first of all, let's just see a little about the investment, just so we know what we're dealing with. So we started with 3 We'll have to look back. 334, 530. We increased it by 2047 in step 1 up here on the last page, and then we decreased it by 113557. Its balance is 223020, and that was 909,450 shares. We took away 3150. That gives us 6,300 shares left. So I'm going to set up the same kind of table. I'm going to have the balance. And again, you don't have to do this in any certain way. And technically, you could do it in 3 entries. Okay, so we've got Lee has 223020. Richard hasn't changed, it's still at 92289, and then Ekstrom at 207607. So the fair value calculation, it tells us way back on page 8, at the end of the year, 32 for Lee, 201,600, 58 for Richard, and they haven't sold any, 304,500, and $29.7350 shares is 213,150. So you subtract the adjustment. If it's going down, it's going to be, so this one has to go down by 21420. This is the difference. Richard has to go up by 12211, and Ekstrom has to go up by 5543. So since we're doing one entry, it's 666, and it is a going. So investments going down. Okay, so what's our entry then? Do we debit or credit the unrealized? Debit unrealized gain. Don't forget OCI. That's huge. And credit investment FVOCI for 3666. Okay, so that's the question. It's double checking on Wiley, and there's two extra little portions they ask for. So one of them, they want to know the balance in AOCI at the end of the year. So AOCI is an equity account. So basically you're going to go and see what's gone into AOCI. All unrealized gains and losses, OCI, will end up here. So this was our first year we ever had these. So to start off, the first time we had AOCI was up here when we sold some of the shares. So we've got a credit of 2047 for May 20th. And then here on December 1st, we have 3666 because it's a loss and that's a gain. So Our balance is going to be 1619. That's the unrealized loss on FVOCI investments. Then they've got a portion where they ask for OCI for the year. And what you start with is items that won't be included in net income or reclassified. And we're going to put the number here. And then they basically add and subtract all the items that went into OCI during the year. So we have unrealized gain from sale, which is back on page 9. So basically we're looking here. There's nothing going into OCI until you get down here. Unrealized gains, OCI, 2047. So 2047. And then we look here. And the next time, that's not OCI. We've got an unrealized gain of 3666. Oh, that was a loss. No one stopped me. Look at this, you guys. This is negative. The investment's going down. This has to be a loss. Oh, thank goodness I saw that. Did everybody get that? December 31st, it's an unrealized loss. I'll just leave it on the screen. Okay, and here, unrealized loss from December 31st, 3666, which gives us a total of 1619, and that means it's 1619. Now, this format, you guys, I haven't seen it before, and I'm sure it's just textbook author likes it for explanation purposes. So don't worry, I mean, you're not going to have to remember that eventually. That's just their way of showing it. So hopefully that'll make sense when you get to your Wiley Plus question. Okay. Okay, I'm going to let you go here, and then I'll do the last page on the next video.